Welcome to the Deep Dive. We're here to take all that information you're swimming in and pull out the really crucial stuff, make it clear, make it stick. Basically, help you get truly informed, maybe even have a couple of those aha moments along the way.
And today, we're diving into some really influential ideas. You've given us these excerpts on Ray Dalio, investing in life, and, well, we're aiming to go way beyond just a summary.
Yeah, much deeper.
Right. We want to really dissect his core thinking on, life, work, money, investing, and find those lessons you can actually use. Not just theories, but practical takeaways.
Exactly. We're going to trace Dalio's journey. It's pretty interesting. He started out middle class, Long Island, not exactly the typical finance background. Then he builds Bridgewater Associates, biggest hedge fund in the world.
Mm-hmm.
And his principles, the ones laid out in his big books, like Principles, Life and Work, Big Debt Crises, Changing World Order,
Yeah.
they actually offer this, surprisingly practical way to handle all sorts of things, not just finance.
It's true. And that background is key, isn't it? His dad was a jazz musician, creative, improvisational. It's a world away from global markets.
Right.
Which makes his journey and how he systemized his learning even more remarkable. It really drives home that these ideas, they weren't cooked up in a lab. They came from real-world bumps and bruises and a lot of hard thinking.
Okay, so let's really get into it. The making of this principled investor, it starts, like you said, pretty ordinary, Long Island.
That's right. No silver spoon, no obvious path to Wall Street. But then, get this, at 12 years old, he makes his first stock purchase.
12? Wow.
Yeah, $300 in Northeast Airlines, and it tripled. Mergent. But, he himself says the reason he bought it was stupid, and he basically just got lucky.
Interesting. Even that early, you see that tension, luck versus skill, something he clearly thought a lot more about later.
Definitely. And it's also telling, I think, that his first spark came from, eavesdropping on golfers he caddied for at the Links Golf Club, Wall Street types.
Shows how exposure, even casual, can ignite something, right? So then he gets more formal education. C.W. Post, then Harvard Business School. Finished in 73.
Right. And even early on, he got fascinated by commodity futures. Why? Low margin requirements.
Leverage. Understanding that early.
Yeah, you see that analytical mind working. He did short stints at the New York Stock Exchange, then Shearson, Hayden, Stone.
And at Shearson, he was already applying this stuff practically, wasn't he? Advising farmers on hedging risk with commodities.
Exactly. Early experience in risk management, that became absolutely foundational for him, Not just for investing, but everything.
But it wasn't smooth sailing. He hit some major bumps early on.
Oh, yeah. Big ones. Like getting fired from Shearson in 74. There was some incident at a party.
Really?
Yeah. It maybe wasn't about his investing smarts, but it highlights something else, right? Professionalism, self-control, just basic stuff, but crucial.
Good point. Can't just be smart. Got to handle yourself. But the really defining failure, the one he talks about a lot, came later in the early 80s.
Right. 1981-82. He was absolutely convinced a huge depression was coming. Put his money, his client's money, where his mouth was.
And he was.
Dead wrong. Couldn't have been more wrong, as he puts it.
Yeah.
He admits he was incredibly arrogant about it. The market took off instead, a massive bull run.
Oof. And for Bridgewater, his firm, that must have been devastating.
Totally. Huge losses for clients. He had to borrow $4,000 from his dad, had to lay off his entire team. Just him left. Rock bottom.
Wow. That's the kind of moment that either breaks you or remakes you.
Exactly. And for Dalio, it was the latter. That pain, that humiliation, it forced a total reset. It gave him, he says, a deep humility, a profound fear of being wrong.
So it wasn't just about the money, it was about the thinking.
Precisely. He realized he needed other perspectives. He needed people who disagreed with him, who saw things differently, to challenge his own biases.
That sounds like the seed of his later ideas, right? Radical open-mindedness, the idea meritocracy.
Absolutely. It was the intellectual birthplace. He had this huge realization. Being successful has more to do with knowing how to deal with your not knowing than anything you know. Shifting from I know to how can we figure this out together?
And this ties directly into that mantra he has. Pain plus reflection. Progress.
It's the perfect illustration. The pain was immense, financial, reputational. The reflection was brutal, confronting his arrogance, seeing the need for diverse thought, and the progress. It wasn't just tweaking his strategy, it fundamentally changed how he made decisions.
And he started actively looking for those independent thinkers, people who push back, not just for debate, but to genuinely understand their logic.
Yeah, that was the very beginning of what became the Bridgewater culture. which leads us to the actual founding of the firm back in 1975.
Right, and it wasn't glamorous.
Yeah.
Started in his two-bedroom apartment in New York City.
Exactly. Humble beginnings shows that big ideas and hard work matter more than fancy offices, at least initially. His first focus was commodities, risk management advice playing to his strengths.
And that daily observations report was key early on, wasn't it? Building their intellectual reputation.
Hugely important. Dalio writing it himself, sharing deep analysis, even contrarian views, that built credibility. And gradually they landed bigger clients. McDonald's was one. Then came really pivotal moments, like getting investments from the World Bank in '85 and later Eastman Kodak.
Those must have felt like huge validation points.
Big time. It wasn't just capital, it was major institutions endorsing his different way of thinking.
And they eventually moved out of the city, right, to Connecticut. Wasn't there a barn involved?
Yeah, they operated out of a converted barn in Wilton for a while. Classic startup feel, almost.
Right.
But like you said earlier, the location wasn't the main thing. It was the vision he had from day one.
Of course.
It was more than just making money. He wanted to build an idea meritocracy, a place where the best ideas win out. And he wanted it built on meaningful work and meaningful relationships, fueled by radical truth and radical transparency.
So that wasn't just a byproduct of success. It was the blueprint from the start.
Exactly. It was intentional. That shaped everything.
Okay, so let's really unpack that core idea. Pain plus reflection, progress. We've seen how it applied to him personally, but how does he frame it as a general principle?
Well, fundamentally, it's about seeing mistakes differently. Not as failures to be ashamed of, but as inevitable steps on the path to getting better, especially if you're aiming high.
So mistakes are data points, basically.
Sort of, yeah. He argues the difference between success and failure isn't whether you make mistakes, it's how you respond. The pain you feel, that's a signal. A powerful teacher, even if it, stings.
Okay, makes sense. Don't avoid pain, learn from it.
Yeah.
So what's the actual process he suggests for doing that?
It's a three-step thing. First, you got to experience the pain, really acknowledge it, don't brush it off or make excuses, feel the consequences.
Okay, face it head on.
Second, reflection. This is key. You need to calmly, objectively look at what happened. What were the real root causes? Not about blaming people, but understanding the why deeply and honestly.
Right. Requires some serious self-honesty, even if it's uncomfortable. What's step 3?
Step 3 is progress. This is where you turn the learning into action. You develop new principles based on what you figured out. You change your behavior. You create systems to avoid the same trap next time. It closes the loop, turns the negative into fuel for positive change.
And that 1981-82 disaster is his go-to example for this, isn't it? Pain, huge losses, humiliation, reflection, confronting arrogance, realizing he needed other views, progress, totally changing his decision process, creating his core principles.
Exactly. That reflection wasn't just about don't make that forecast again. It led him to fundamentally re-engineer his whole approach, seeking out dissent, valuing the challenge that came directly from reflecting on that pain.
And he didn't just keep this to himself. He built it into Bridgewater with things like the issue log. How does that work?
Right. The issue log is basically a system, a central place to record mistakes, problems, anything unexpected that happens in the firm. And for every issue logged, there's a process. Diagnose the root cause, figure out what went wrong, identify the lessons. It's about collective learning, turning individual slip-ups into organizational improvements. Not about finger-pointing, but about getting smarter together.
That's logical. If you want the whole organization to improve, you need a system to capture that learning, right?
Yeah.
Not just rely on memory. Now, he talks constantly about principles. What exactly does he mean by that? Why are they so central?
Okay, so for Dalio, principles aren't just like fuzzy ideals. He defines them as fundamental truths that serve as the foundation for behavior to get what you want out of life. Think of them as guides, beacons for your actions.
Like a personal rule book or operating system?
That's a good way to put it. They help you connect your values, what you really care about, to your actual actions day to day. They help you make consistent decisions based on reality, instead of just reacting emotionally to whatever happens.
Yeah, and where do you get these principles? Does he say just read his book and adopt his?
Well, you can learn from others for sure, but he really stresses that the best principles, the ones that stick, come from your own experiences, especially from reflecting deeply on your own mistakes and successes. It's about understanding cause and effect in your own life and then sort of codifying those lessons.
Makes sense. You internalize them more if you've lived them. He also lays out this 5-step process to get what you want out of life. Sounds very practical. Can you walk us through it?
Yeah, it's designed as this loop, this iterative process. Step one, have clear goals. And this means really prioritizing. You can't have everything, he says. So figure out what you truly want, distinguish it from just, whims, and interestingly, aim high. Great expectations can unlock potential.
Okay, know what you want, be ambitious. Step 2.
Step two, identify and don't tolerate problems. Problems here mean anything blocking your goals. The key is to actively look for them, even welcome them, because they're opportunities to improve. Don't stick your head in the sand.
Got it. Problems or chances to get better. What's step 3?
Three is accurately diagnose problems to get at their root causes. This is critical thinking time. Understand the why behind the problem before jumping to solutions. Dig deep. Find the real root cause, not just the symptom. And crucially, be honest if your own weaknesses are part of the problem.
Right. Understand the core issue, not just the surface stuff. Then step 4.
Four is design a plan. Think like you're designing a machine, he says. How can you change the inputs or the design of your approach to get a better output? Develop concrete tasks, map out the steps, maybe consider different ways to get there.
Makes sense. Have a roadmap. And the final step.
Step 5, do what's necessary. Push through to completion. Execution. Discipline. This is where the rubber meets the road. Stick to the plan, build good habits. A great plan is useless if you don't actually do it. And remember, it's a loop. You do the plan, you learn, maybe find new problems, so you go back, refine goals, diagnose again. It's ongoing.
He even used that wilted peas story from the fun book to show this applies to small stuff too, right? Like canteen food quality.
Yeah, it's a great little example. It shows it's not just for huge strategic things. Goal, good amenities, problem, wilted peas, diagnosis, supplier issue, preparation, plan, find new supplier, change method, action, implement. It's a universal problem-solving framework.
Okay. Now let's talk about 2 really core and maybe controversial Bridgewater concepts, radical truth and radical transparency. What are they?
Right. So radical truth is about being completely honest and direct, especially with tough feedback or admitting mistakes. The key phrase is never say anything about someone that you wouldn't say to them directly.
Okay. Blunt honesty and radical transparency.
That takes it further. It means letting pretty much everyone see pretty much everything, how decisions are made, performance data, mistakes, making it all accessible.
Wow. That sounds intense. Why does he think that's so essential?
His argument is multifold. First, it surfaces problems faster. If everything's out in the open, issues can't hide. Second, it maintains high standards. Everyone knows what's expected and what's happening. Third, and this is crucial, it's the bedrock for the idea meritocracy. You need open information for ideas to be judged fairly. And finally, he thinks it speeds up learning and builds real trust.
But the flip side,
Yeah.
it sounds like it could be incredibly uncomfortable. Maybe even create fear.
Absolutely. And Dalio admits it's not for everyone. There's a big adjustment period. You have to learn to give and receive that kind of directness, manage your ego, get used to scrutiny. A lot of people apparently leave Bridgewater in the first year or two, and this culture is likely a big reason.
Yeah, you hear stories, meetings recorded, performance reviews maybe being public at one point. That's miles away from most places.
Definitely. Recording meetings for review, making evaluations visible, at least historically. Even small things like that coffee pot email using a minor slip-up to reinforce the expectation of openness about everything. But it's also crucial to mention the criticisms. The fun book raised concerns about it potentially becoming a toxic culture, maybe feeling like public shaming sometimes, or maybe not being applied evenly to everyone.
Right, that potential for power dynamics to skew it.
Yeah.
Easier to be radically truthful downward than upward, perhaps. And the constant monitoring potentially creating anxiety.
Those are really important points. The intent might be truth and merit, but the implementation really matters. Without genuine trust and psychological safety, these tools could backfire,
Okay, so radical truth and transparency are the fuel, but the engine they're supposed to drive is the idea meritocracy. Break that down for us. What is it? How does it work?
Right. An idea meritocracy is basically a system where the best ideas win. Simple concept, hard to execute. It means the quality of the idea matters most, not who said it, not their job title, not their seniority. The goal is to tap into everyone's best thinking to get the best answers.
Sounds ideal. How do you make that actually happen in a company?
It needs a few things working together. First, people have to feel they can speak up honestly, even with unpopular ideas. That's radical truth again. Second, you need thoughtful disagreement, rigorous, respectful debate where ideas get challenged and improved. And third, you need clear, agreed-upon ways to resolve disagreements so the best idea actually prevails based on evidence and logic.
And this is where believability weighting fits in. That sounds key to making it work fairly.
Exactly. Believability weighting is the mechanism. It basically says, okay, not all opinions on a topic are equally valuable. We should give more weight to people who have a proven track record in that specific area and who can clearly explain their reasoning, the cause and effect.
So it's data-driven credibility, not just gut feel or hierarchy.
Precisely. It's about weighting input intelligently based on evidence. It informs the final decision, which is still made by the designated responsible party, but it provides crucial context.
Got it. And Bridgewater developed specific tools for this, right? Like the dot collector.
Yes, the dot collector is a big one. It's used in meetings, often in real time. People can give quick, often anonymous ratings on different aspects of the discussion, people's arguments, etc. It gathers structured feedback beyond just who talks loudest. And crucially, it helps gather diverse input directly addressing that lesson from his 81-82 failure about needing multiple perspectives.
And the issue logs we mentioned. How do they feed the idea meritocracy?
They provide the historical data, the evidence base. By tracking mistakes and analyzing root causes, the organization learns what works and what doesn't. That collective knowledge then informs how new ideas are evaluated. It makes the process more evidence-based, less prone to repeating errors. Again, systematic learning from that 80s failure.
And then the baseball cards, what's the deal with those?
The baseball cards are like dynamic employee profiles. They try to summarize strengths, weaknesses, past performance track records, even evolving believability scores based on data from the dot collector and other assessments. The idea is to make credibility more transparent and data-driven to help with that believability weighting in decision-making.
But again, criticisms exist, right? That these tools could be gamed or feel like constant surveillance, almost Orwellian, as some critics in the fund put it.
Yes, those critiques are definitely out there and important. For an idea meritocracy to work as intended, there has to be deep underlying trust and a commitment to fairness. If people feel the tools are being used punitively or manipulatively, it completely undermines the goal and could stifle the very honesty it's supposed to encourage.
Okay, beyond those really core Bridgewater concepts, Dalio has other key principles, like increasing reality.
Yeah, being a hyper-realist, he calls it. Accept the world as it actually is, not how you wish it were. Truth, even uncomfortable truth, is the starting point for good decisions.
And closely linked is evolve.
Right back to pain plus reflection. Progress. Life is about learning, adapting, growing through trial and error. Don't let weaknesses define you. Focus on finding ways around them or developing new strengths.
And be radically open-minded.
This is huge for him. Actively seek out the possibility you're wrong. Understand your biases, your blind spots. Value finding the truth more than being right. Be willing to genuinely change your mind.
And for work specifically, building teams and systems.
A few key ones.
Hire.
Right. Focus on values and abilities first. Skills second. Look for curious people. Manage as a designer of a machine. Think about the whole system. Build around goals. Define responsibilities clearly. Evaluate people accurately, not kindly. Honest feedback is crucial for growth, even if it's tough. It's a form of caring, he argues. And systemize your decision-making. Turn successful approaches into repeatable principles or algorithms.
So it's all about designing this efficient, self-improved machine with the right parts, clear rules, and constant learning.
That's a good summary. Now, shifting gears a bit, let's look at how Dalio sees the bigger picture economies and markets. He's got this knack for simplifying complex stuff.
Right, the economic machine idea. What's the core concept there?
It's basically saying, look, the economy seems chaotic, but underneath it operates like a machine with understandable cause and effect links. The most basic unit is the transaction buying and selling. Add up all the transactions, that's the economy.
And the key driver is spending.
Yeah, because one person's spending becomes another person's income. It creates this cycle. The main players are people, businesses, banks, government, and the central bank. Long term, our living standards go up because of productivity growth getting better at making stuff. But short term?
Short term is all about credit.
Largely, yes. Credit lets us spend more than we earn now, but it creates debt the promise to pay back later. Too much spending chasing too few goods. That's inflation.
Okay, and he sees distinct rhythms in how this plays out, especially with debt. Short-term and long-term cycles.
Exactly. The short-term debt cycle is the one we see more often, maybe 5-8 years. Think of the typical business cycle. Central banks lower interest rates, credit gets easier, people borrow and spend more, Incomes rise, asset prices go up. That's the expansion.
Until.
Until things overheat. Inflation picks up. So the central bank raises rates to cool things down. Borrowing gets expensive. Spending slows. Maybe we get a recession. Then the bank lowers rates again, and the cycle restarts. Crucially, he notes, we usually end each cycle with more debt than the last one.
And these smaller cycles build up into the long-term debt cycle.
That's the idea. This one plays out over decades, maybe 50 to 100 years. You get this long period where debt grows much faster than income. It fuels asset bubbles, feels like prosperity, but eventually the debt load just becomes too heavy. Can't be serviced. That's the peak.
And then comes the deleveraging.
Yep, the painful part. People, companies, governments cut spending, sell assets, try to pay down debt. Incomes fall, asset prices drop, and interest rates might already be near zero, so the central bank's usual tools don't work well.
What can policymakers do then?
Dalio says they have four main levers: austerity, spending cuts, debt restructuring or write-offs, wealth redistribution, taxes, and printing money. The trick, he argues, is using a balanced mix, what he calls a beautiful deleveraging, to manage the process without a total collapse. He looks at things like 2008, the Great Depression, even Weimar Germany through this long-term debt lens.
A beautiful deleveraging sounds tricky.
Extremely delicate balancing act. Requires skillful policy.
So given all these cycles and complexities, how does he suggest people invest? That brings us to the all-weather portfolio. What's the thinking there?
The core idea of all-weather is resilience. It's about building a portfolio that can handle different economic conditions reasonably well, whether growth is rising or falling, whether inflation is high or low. Because, let's be honest, predicting those things consistently is incredibly hard.
So prepare, don't predict.
Exactly. The goal is to get equity-like returns over the long haul, but with much less volatility. A smoother ride.
How does it achieve that?
By balancing different types of assets that react differently to growth and inflation. Typically, you'll see stocks, different types of bonds, long-term, intermediate, gold, commodities. But it's not just about splitting money evenly. It's about balancing the risk exposure to different economic environments.
So each economic season shouldn't sink the portfolio.
Right. It aims for roughly equal risk contribution from scenarios like rising growth, rising inflation, falling growth, falling inflation, and so on. This leads to risk parity concepts, sometimes using leverage on safer assets to balance the risk of volatile ones like stocks. It's very different from a simple 60-40 portfolio, which is dominated by stock market risk. The outcome should be more stable, consistent returns over time, whatever the weather.
Designed to weather any storm. Makes sense. Okay, finally, he zooms out even further with this big cycle idea, the rise and fall of nations. That's a huge perspective.
It really is. He suggests major powers tend to follow these long, roughly 250-year cycles: rise, peak, decline, with transitions maybe taking 10, 20 years. He thinks understanding this pattern helps make sense of today's world.
What drives these cycles? What makes a nation rise or fall in his view?
He points to a set of key factors, things like education quality, innovation, competitiveness, economic output, share of world trade, military strength, financial center power, having the reserve currency, sound government finances, and critically, internal order and social cohesion. Strength across these builds power, weakness signals decline.
And he identifies stages within the cycle: rise, top, decline.
Yeah, the rise. Strong leadership, good institutions, education, innovation, growth, building military and financial power. Think Dutch Republic, British Empire, early U.S., rising Chinese dynasties, the top peak. Reserve currency status, good, but risky if you overborrow. Maybe rising costs make you less competitive. Rivals emerge, complacency, debt builds up, wealth gaps widen, internal conflicts grow. Think U.S., post-WWII, peak British Empire, peak Chinese dynasties, the decline. Financial bubbles pop, money printing, currency weakens, internal conflicts intensify, external rivals challenge you, maybe wars. Think Dutch losing reserve status to Britain, Britain weakened by wars, U.S. showing some signs now, debt, conflict, rising China, falling Chinese dynasties facing rebellions.
It's a sobering long-term view, puts current events in a different light.
It does, and it really emphasizes that a nation's strength isn't just military or economic, it's deeply tied to its internal health, social cohesion, wealth distribution, effective governance.
Okay, we've covered a massive amount of ground, Dalio, on life, work, economics, investing, history. What are the big takeaways? How can people listening actually use this?
Well, I think a huge one is the call to action. Craft your own principles. Don't just read Dalio's. Use his process. Reflect on your values, your experiences, especially mistakes. Figure out what works for you, write it down, make them living guides, refine them as you learn.
So the process is maybe more important than the specific principles themselves. And for managing money, personal finance.
Key lessons there. Humility, don't assume you know everything. Diversification is crucial. His holy grail is spreading risk. Understand the basic economic cycles. Prepare for different scenarios. Don't just bet on one prediction. Learn from your investment mistakes. Maybe keep a journal. Be careful with debt. Think globally. Focus on long-term value.
It feels like the underlying theme is this constant evolution, right? Adapting, learning.
Absolutely. Life and ongoing learning. Pain plus reflection. Progress is that engine. Embrace change, embrace uncertainty. And ultimately, he connects it all back to finding meaningful work and meaningful relationships, suggesting these principles are tools to help achieve that deeper fulfillment.
So this deep dive really gives you a powerful toolkit, a framework for thinking about, well, almost everything.
It really does. And maybe the best thing you, the listener, can take away isn't just Dalio's answers, but the inspiration to ask the right questions about your own life and work, and to build your own systematic way of finding answers through reflection and experience.
Yeah, those core ideas, the 5 steps, radical truth, idea meritocracy, understanding debt, diversification, they provide a solid base for navigating challenges.
Definitely. So maybe a final thought to chew on. Where's one area in your life right now where applying a more principled approach, maybe borrowing from some of these ideas, could make a real difference? What are your core values there, and how could you turn them into practical guides for your actions?